Thank
That's a
you.
pleasure.
So, yes, today we are going to be having two amazing founders, Mitchell Jones, who is the co-founder of Lendtable, and Odunayo, who is the co-founder of Piggyvest. So welcome, everybody. Why don't we start off with a few minutes of introductions? I'll pass it over to Odunayo.
Hi, everyone. My name is Odunayo Eweniyi. I'm co-founder and COO of Piggyvest. Piggyvest is an automated savings and micro-investment platform based in Lagos, Nigeria. We're about 5 years old, so we've been working in personal finance and micro savings and micro investment for about 5 years now. We have about 3 million users on the platform, and we started with peer savings, and we've managed to expand the platform into other kinds of savings and also peer-to-peer like funds transfer. And I'm really excited to be here. Thank you.
Thank you so much. Yeah, it's super exciting. We have a lot of great questions, and let's pass it over to Mitchell.
Hello, everyone. My name is Mitchell, based out of the United States. I'm a co-founder of Lendtable. We are a startup that helps employees get their full retirement benefits, like their 401k match, if they can afford to do so on their own. We've raised about $6 million to date from awesome partners like Y Combinator, Thaler Equity Partners, SoftBank, some great people, Possible Foods. Before that, I was running a startup called Parable, was a personal financial assistant. Before that, I was at Facebook, where I was running a team called Nobel Financial Services. We built digital wallets for cash economies, helping people save and invest their money in places like LATAM and APAC. Before that, previously, I was at Dropbox as a cybersecurity product manager. And before that, I studied in university at Yale University in New Haven, Connecticut.
Wow. So as everybody can see, these are some pretty amazing credentials that our founders have today. And so being with the conversation of financial literacy and being a financial advocate myself for Gen Z, I want to know, how can companies today open the doors for financial literacy with more education? So Mitchell, we'll start off with you. How do you think that you can do that within your company?
Great question. So financial literacy is a part of the journey on for our product, right? You can't help people understand what they're missing if they never understood what they had, right? So for us, financial literacy is core to what we do. And, there's a lot of discussion around whether or not it is even possible to achieve financial literacy. And I think the context matter. What is the context in which people are learning about their finances? What is the context in which you're helping people get to an optimal state for their finances? So I think the way you do that is you really, when you're building a company, you build it into your product, right? Financial literacy must be a part of the experience, right? That's a very, very important thing. And it's one of the things that at Lendtable we focus on a lot when we are continually building multiple versions of our product experiences. And when we launch new products, it has to be a part of the journey, right? You have to really handhold people as you're bringing them along. It builds trust, but also it does build education as well.
I think that's an amazing opportunity for the younger generations to start tapping in by having companies like Lendtable and yourself really prioritizing that financial literacy at the foundation. Being in West Africa, I would like to know about Piggyvest and how are you approaching financial literacy?
All right. So just much like Lendtable is something that we had to build into the product. When we started in 2016, savings across the African continent, not just in sub-Saharan Africa, was at about like 15% level. And it's not because people didn't want to save, it's because the infrastructure just wasn't there. So we not only had to start to build the product itself, we had to build it very publicly, and we had to build it in a way that educated people. So we were very big on social media. As a millennial myself, it was very important that the generation that I was starting with, as my generation, we was having these conversations with them daily. So we built very socially and received feedback very socially. And a key, very core part of our product before the pandemic was having events that we called open houses. once every month, where we just kind of sat with the users and spoke to them about like random financial topics, stocks, in the early days, cryptocurrency, budgeting, like petty cash and things like that. And then post-pandemic, we moved to having those events virtually. But I thought it was very key in kind of hearing from our users, this is what I know, this is what I want to know, and this is where I'd like the product to guide me. And that's been very useful, very key to the growth of the platform as well. How do you educate them? How do you make sure that the features that you're adding to the product, you're not adding in isolation, you're adding in such a way that people can actually use it? And so it has to be at the bedrock of what your product is based on. And as brands that are trying to educate people, you also kind of just build and throw at people. You can't condescend to them. You have to build with them, in conversation with them. And that's been a lesson that we've taken over the past 5 years. And I think it's spread across Africa, actually. This generation and then the generation after us, they're now very big on money and understanding it. And I think it works.
Yes. And speaking on the contrary, what do you think from especially talking on social media and in the public about financial literacy? What are some things that people are lacking in the space?
Right. I think that a lot of the time when you're listening to people, what becomes clear is that it's engagement that's lacking, right? It's people want to be able to have these conversations with a brand, for instance, that's positioned as kind of like your friend who just knows about money, and not just a brand that's building and trying to teach it to you. So a lot of the things are lacking: engagement, proper infrastructure, and simplicity, and the ease of use. All of the things that people consider very cliche terms, but are really really incredibly important when you're trying to build simple financial products, right? Money is not very complex when there's a great foundation, but the foundation is kind of broken right now. And so we have to actually do the work to engage people, teach them easily, teach them seamlessly, make it affordable, and accommodate as many people as you can, because not everyone can afford the big ticket financial items. So you kind of have to break it down.
Yeah, I think it's super special about the opportunities that you're providing for maybe people of lower income classes, or who can't, or who are not able to access this financial literacy. And so I want to pass it over to Mitchell. What do you think is one of the aspects of financial literacy that provokes people to making maybe poorer financial decisions?
Yeah, so I think, Odunayo, you highlighted really the big problem, which is the liquidity trap, and how do we get to a state of higher liquidity? At Lendtable.com, we are actually tackling the next big gap, which is a very, very, really, really strong financial literacy problem in the United States, which is the difference between saving and investing, right? So many folks, what they do is they save, but they save it in a checking account where they don't get any compound interest. And they can't really grow their wealth or make their money work for them. And they leave things like their 401k match on the table, which is, in the United States, is free money. So for us, a lot of what we want to build for financial literacy is really highlighting that difference between saving, which is really important that you have your emergency savings, but that next step, which is, you don't put it under your pillow or your mattress anymore. We need you to put it in retirement accounts. We need to put it in investment accounts, right? And just really, truly understanding what, we call the eighth wonder of the world, which is compound interest, right? It's really, really important to make your money work for you. And that is a very, very big crisis in the United States, is, the saving and investing crisis, right? So many people are on that step one, which we were talking about before, which is that liquidity need, that liquidity crisis. And then when they get out of that liquidity crisis, because they are just coming out of it, they're very, very, very focused on making sure they're saving, right? Because that feels safe. It feels like cash on hand. But what that means, though, is they then don't end up getting leverage in there and being able to invest in all these other really, really important things. Because that's how you get to a state of financial security in the 40 years, right? So much of the conversations around the 5 years, and that's the most important one, because your first order needs come first. But then the second step is, how do you start thinking about the 40 years, the 50 years, when you want your children to be able to go to good school, when you want to be able to make sure you can have a good neighborhood and a roof over their head. And that's a lot of the times where we get stuck in the United States. And specifically, Lendtable.com is focused around eradicating that problem, because we see so many working folks in the United States who are saving everything in their savings account.
So speaking about employees and workers, do you think that providing financial literacies for your employees specifically would help your business? Again, I'm going to pass it over to Mitchell.
Yeah, I mean, it's paramount, right? As I was always told growing up, you have to practice what you preach. So it's really important that everyone on our team, understands what does it mean, like what are the steps, right? Like what are the steps they should be taking, right? We have some folks who are pretty far into their career. We have other folks who are just graduating from college who come to work for us, right? I feel a sense of responsibility that if we're going out into the world and trying to help everyone else be prepared for retirement, the first place where you should start doing it is, if you can afford to do so, you should start thinking about it when you are a 22-year-old getting out of university, right? So for us, it's very important that we also practice what we preach, right? Help our young people in our company, but also everyone along the way, right? Everyone's at a different spot in their retirement journey, and we're trying to make sure everyone gets there. So Lendtable.com is not Lendtable.com if Lendtable.com employees are not doing the right things with their finances as well. So that's a very big part of it for us, is making sure that it's like, hey, okay, so you just got out of college. So, we help people get their 401k matches and their employee stock purchase plans and their HSAs. How are you thinking about these things for yourself? But number one, make sure you obviously, of course, pay off your student loans and have your savings and all these good things. But it's time to talk next steps as well, right? It's a very important part of, you can only be something if you're actually being it yourself. So before we can be that for the world, we have to make sure we're being that for our employees.
And Odunayo, how would you tackle providing financial literacy to employees?
Right. So it's mostly like Mitchell has already mentioned. When we started the company, we were hiring people our own age, and so it was the conversations very easy when we're building features into the platform, because it's things that we ourselves would use and things that we ourselves would need. So in Nigeria, the structure is slightly different. We don't have like a working credit system, so student loans aren't like a part of the conversation. But how to increase earning power, what percentage of your income to save, and then how to like subsequently be able to afford to invest are conversations that we kind of have to have daily. So the conversation is ongoing constantly, and our employees were very user focused, are the first ambassadors. We expect them to advise users. We expect everyone who comes to work at Piggyvest to be a product specialist. To be a product specialist, all of the education that we're trying to put out there for the users, you have to have for yourself. And so that's kind of how we work. Is we have like a massive worker community, WhatsApp groups, and things like that, where these conversations are constantly going. So you're not advising users without having that knowledge for yourself or practicing it for yourself. And that's really important as a culture that we've tried to maintain over the past few years.
Yeah, company culture is extremely important, especially when you're talking about financial literacy. It has to start from within and grow and show to the world with those methods like you were talking about, community engagement, having those things online for people like myself or other people in the world to see. And so I want to take a step back, just overall as startups and as founders. What really needs to be acknowledged as a startup in the financial literacy space? Odunayo, I'm going to pass it over to you first.
Right. Well, I mean, I think that's like a key thing that, and I will speak from an African perspective. I'm very new to the UK tech ecosystem, so not enough experience to speak on it yet. Is that a lot of the brands and the companies that have tried to do it before, first of all, ignored people under the age of 30. So there's something in Africa where like every government is trying to tackle financial inclusion. But one of the things that we realized very early on is that even though younger people, people who were tech-enabled, tech-savvy, were included in the financial ecosystem, they were ignored. And so in some way, they were excluded as well. For instance, in Nigeria, at the time we started thinking about the fintech company, the minimum ticket you needed to invest to be able to take advantage of any investment opportunity was about ₦500,000 naira. And on the average income was about 100,000 naira. I'll convert those to dollars, but you can just imagine if you had to, like, you were earning 500 pounds a month and you needed a minimum of 2,000 pounds to be able to take advantage of any investment opportunity. And so the excluded population is significantly large. Young people make up about 60% of the Nigerian population. And so a lot of companies were not taking advantage of that at all. There's current rich people, but the people who are being ignored are the people who are going to grow up to become well-to-do tomorrow if you allow them into the financial services ecosystem. So one of there's a disconnect between how companies were doing it and the people they needed to be speaking to. And again, they were doing it from the point of view of, we are speaking to people below, as opposed to we are engaging our future customers. And that's where, like, companies led by millennials, companies led by Gen Z have the advantage. And that's something that we took advantage of, right? I'm building for my friends, I'm building for my age mates, I'm building for my peers, I'm building for my siblings, people I would ordinarily have a drink with, people I would go out with. And so it's easier to build when you're, again, in conversation, and you're just like, it's like we're having a conversation, a very casual one, but it's about money, and we're able to put out tips and tricks without it sounding like class, right? Or like I'm trying to give you an education. And so that, like, tone of conversation, that direction is what has been historically missing. And I think that that's what many companies have now, like Cash App, PayPal. They've eliminated all the middlemen and all of the, like, big conversations, the jargon, and are just talking directly to the users in exactly what they need to hear, and doing it seamlessly and doing it easily. And that's kind of the people that we're looking up to as well.
Yeah, I think there are barriers to entry for financial planning, and anything really within finance for younger people or people of lower income classes. And so when you talk about actually, like, building beside rather than behind with your team, it really does make an impact. And so, Mitchell, I'm going to pass it over to you. And what do you think needs to be acknowledged as a finance startup?
Yeah, it's a great question. I think if I could only say two things, it would be one is certainly knowing your history, right? Like knowing all the companies that have come before and what they've tried. The other one I would say is knowing your audience and your customer. Those things are very, very big in fintech, and I'll kind of explain both. So number one, on knowing your history, there've been, and I'll speak specifically for the United States, it's been a history of a lot of fintech innovation. And you can't really know what has been tried or what you should try without really understanding who came before you, why they failed or why they succeeded, right? So a lot of the early successes of Yodlee, Plaid, when they came second, they were understanding what went well and what didn't go well, right? So when you look at fintech, especially if you're looking at consumer fintech, you really need to understand, how did some things go to the graveyard and how did some end up becoming major successes? And the reason why is if you don't know your history, you're doomed to repeat it, right? So that's a very, very big thing. So in the earliest days of your startup, really getting smart on what all has happened in the space, especially for the product you're trying to build, right? Because for so many of them, they've been built before, right? So many players have tried to be a wallet in the United States, right? So many players have tried to be a personal financial assistant or advisor in the United States. So many people have tried to be a robo-advisor. So understanding what happened between all of them and why some succeeded and why some failed is very important if you're trying to get your startup off the ground. Because if not, you're going to repeat a bunch of the same mistakes, right? So reaching out to those people and really trying to get access to them in whatever way you can. Odds are people are busy and it's very hard to get in touch with people. I certainly know that when I was trying to get Lendtable off the ground, but you got to figure that out. And then the second one is really, and I think this is just cuts across all, is you got to know your audience and you got to meet them where they are, right? One of the things that I learned in my time at Facebook was we were building digital wallets for people who had on-ramping to financial service for the first time ever. And in APAC or in Asia Pacific, they use things very differently than we do in the United States. So you can't build an American product, right? Because you need to build empathy with what your users are going through. So when we built Lendtable.com, it was the same thing, right? You can't build the product for someone who necessarily works in tech and is a software engineer and has enough money to always get their benefits. You need to understand, you need to talk to your users. You need to go to the places where your users are. If your users are in Bentonville, Arkansas, and they work at Walmart, you need to be talking to the people in Bentonville, Arkansas that work at Walmart. You need to understand why. Like why do they want to use your product, right? And that's very important. And if you are not doing that, you're just going to completely build the wrong thing. And the other thing is, if it's a consumer, it's going to cost you a lot of money to get to your users if you don't actually know how to reach them and build the things that they want to have. So in the whole, when you're getting a fintech startup off the ground, especially in consumer fintech, you got to know your history. You got to know what people did before. It'll save you a lot of time. But number two, you got to know you're building something people want, and you got to really know who is going to be your customer and how you're going to be serving them and helping them. And you need to be obsessed with that. If you're not obsessed with it, you're probably going to lose, to be completely honest with you. So.
Yes. So generalized one, turning those past failures of other startups and making them into your future successes, being able to apply those methods and things within your own startup, and especially as a founder. And two, making sure you have your target audience speaking to your audience exactly who, what, where, and why, everything about them. I want to ask some questions about your journey as a founder. So Odunayo, we're going to start with you first here. And what do you think specifically needs to be challenged or changed, especially being a Black founder and rising with COVID-19? It's something that's extremely important, and being a woman, especially within this field. What challenges have you personally faced, and what are the opportunities that we can help change and make this a more equal opportunity?
Yeah, well, I think that the blanket answer would be that representation matters. And, I've been trying and running companies since I graduated from university, and that was since 2013. So roughly 8 years here. I've been through several fundraising journeys, very painful ones, and more recently, less painful. I've been in meetings where I was made to distinctly feel like I didn't belong there. But for me, I think that one of the things that most matters is that you have an awareness of who you are, what you're doing, why you're doing it, and where you're going. And for the most part, the Black experience is kind of universal that way wherever you are. Once you have those four things, every other thing that kind of comes around it is a distraction, right? It hurts, sometimes it's like you're made to wonder, like, is it really worth it? But it really is, because when I started in 2013, there was about, I don't know, you could count the number of women in the Nigerian and African tech ecosystem. But today, it's 8 years after, and there is so many women that we're able to have more balanced conversations, and we're able to sit in rooms where I'm not the only female founder who sat there. So there's many policies that you can put in place. There's interventions, right? I personally run an angel fund that's targeted at female-led companies and diverse teams. But the key thing is that the more women, the more Black people that people are able to look up and see, the more normal it becomes. And the more we're able to challenge those ingrained unconscious or conscious heuristics and biases that people have put in place, right? I think that it's a journey that we all kind of have to take uniquely, and advocate for more funding going to female founders, more funding coming to emerging markets, more funding going to Black founders and founders of color. But what matters most is that those founders themselves, as us, are really bullish about the journey that we've started and the journey that we're on, because whether you like it or not, whether you took responsibility for it consciously or not, you do matter for the generation coming after you, because if you've gone ahead, somehow you've kind of made the journey easier for them.
Yeah, I think that especially within the past year, there's been such revolutionary ways in the right direction, and where we're headed. And so, Mitchell, I want to hear your thoughts about the opportunities of who actually gets to be a founder.
I mean, I think even as I sit here right now, most Black folks in the United States and also abroad do not get the opportunity to get this. And there's kind of a two-pronged issue, right? Step one is, most people, to be a founder, you have to be able to take on the risk. Most people are focused on, as we've been kind of talking about a lot in this conversation, first order needs, right? If you're the first in your generation to get an education, you know, you're probably going to want to go to a career that's going to be very stable and also provide money to your family, right? The other thing is in the United States, and this kind of gets into the second part of the issue, which is one is about risk and being able to do it and, you know, being able to stomach it, right? Because at the end of the day, if you're a Black founder, you got to remember you need to run your company like a founder, right? You are the best founder out there, right? And you know, Oprah Winfrey said, you got to work twice as hard to get half as much. That is something that, you know, she's like Black people think about all the time. But at the end of the day, you have to run your company like a founder, right? And you can't see yourself in that lane as a Black founder. But what we also know is true and staring us down on the other side is Black people in the United States get less than 1% of the VC dollars in the United States. We also know that majority of the money is in New York City, but majority of it's in San Francisco. San Francisco is a place where Black people do not really live anymore, right? A lot of them have gotten displaced over the years through gentrification and many other things, right? So at the end of the day, you have this uphill battle where a lot of VC is very centralized still, and it's becoming more decentralized and more democratized. I think the pandemic has forced a lot of that as well, because VCs have had to deploy capital to people not in San Francisco. But that is still the thing that you're facing, right? And you can't think about that every day. So, you know, when we go out to fundraise or when we're building the company, we unfortunately don't have time to think about that. Odds are that less than 1% of the dollars go to Black founders. But that is true, right? And you need to know that is true because that has to change. So in addition to me doing whatever I can to, you know, if there's any, for example, if there are any founders of color on this call, you can get in contact with me, add me on LinkedIn or anything. It's important to make sure you're opening the door for other founders, but it's also the challenges on the VCs, right? They have to be willing to invest in companies that are not just the stereotypical graduated from Stanford, goes to Silicon Valley, worked at Google before, you know, like that you can't just keep investing in that mold. And, you know, if you're wondering, well, where do I start? You can go to my Twitter, who is Mitch Jones 7, and my pinned tweet is a list, an open source list of all of the Black founders that have companies that are active. And it has them by stage, it has them by like technology, it has them by industry. So there's no excuse for saying I'm not informed about what Black companies are out there or what Latina companies are out there. You have to also put in the work as a VC if you want to also be the change. And if not, and if you only want to keep investing in the same spaces, then, you know, no matter what, women will also always be a small share of the pie if you only want to keep doing the same thing. Black people will stay less than 1% of the VC dollars, even though we're 13% of the population. Those things won't change in the United States, and I would be willing to guess and argue in other places as well, unless we really tackle this from two sides. As a founder, you just got to run, right? You got to build the best company you can, and you got to be very narrow-minded and focused about it. But at the same point in time, you got to open the door for other people, and we have to challenge venture to be more inclusive in where they are putting their dollars.
Yes, so the journey does not just start here. It goes on to Mitchell's Twitter and understanding and becoming aware and informed of how you can support and head into the right direction. And so speaking of COVID and the pandemic has definitely revolutionized a lot of aspects of our lives. Some of us were just sitting on couches, figuring out who we are, where we want to become. Others were hustling and bustling, working on their startups. And so I want to know, Odunayo, we'll start with you. How has the surge in digital and cashless payments during the pandemic influenced the interest for financial literacy?
Well, I'd say positively, because we were prepared for like the worst when the pandemic started. First, we had to kind of decentralize the team, and everyone had to start working from home. And then a month after that, like Nigeria went into a lockdown, and there was, for a while, it was kind of touch and go, because lots of businesses were closing and people were losing their like sources of income. But then there was kind of like a weird shift where people started to turn to platforms like ours, that's like personal finance platforms, micro savings platforms, as a way to keep their funds and learn more and be more familiar with their money. So we actually saw a bit more activity at the height of the pandemic than before it, where people were asking questions, asking to learn, and we were putting on sometimes 2 virtual events in a month just to kind of answer questions, open houses, Instagram lives, clubhouse rooms, and several different inbounds were coming in, with us having to also launch new features, right? And there was also the rise in the interest in crypto, and as a personal finance app, we kind of also started working on how do we allow low income earners take advantage of the cryptocurrency boom. So it was a very positive result, because we saw people go back to the drawing board. Like typically you'd say save for the rainy day, and people never thought like a worldwide rainy day would come, and then it did. And all of a sudden everybody wanted to prepare for the next one. And so we were hard at work creating different avenues and different learning programs, and helping people kind of get a grasp of what's going on right now and how they can move forward. And also we had to hire more people to kind of cope with the surge of people asking questions and asking for products, and we had to build faster as well. And maybe because everyone was also building from home, we saw an increase in productivity. So it was all really very tech aligned and very net positive for us.
Yes, I know personally when COVID-19 happened, I think a lot of the world thought that we would just sit down and do nothing, but a lot of people, on the contrary, were very productive, wanting to get everything aligned, especially their finances. And so all those questions coming in about the stock market, about cryptocurrency, about budgeting and emergency funds really unveiled this whole financial literacy movement. And so, Mitchell, how has this kind of opportunity impacted your company? Has it allowed you to maybe change your vision with the company, or see where your company is going to be heading in the next 5 or 10 years?
Yeah, it's a great question. I think that for me, and for a lot of what we're doing, specifically a lot of it's retirement based, so a lot of it's more accounts that are already digitalized. But I think the very exciting thing that we've seen actually is a lot in that payment space, right? So in the United States, there's cashless and digital payments a lot. But I think the really interesting and cool thing that we've seen is a lot more work specifically in a lot of other markets, right? So, in Africa, the Piggyvest of the world, or, you have Flutterwave getting acquired by Stripe, or Chipper Cash raising a big round. A lot of the world has accelerated to digital payments now because of the fact that so much of what was kind of challenged before on how you were able to do business, you can't do the same way. And I think that's been so exciting to see. So maybe a little bit less with our space, because so much of it is already, to put money into an ESPP or a 401k, you kind of got to do it online. But I think for a lot of the payment space, it's been phenomenal to watch. As just somebody who just really enjoys fintech. And, in the United States, it's been a little bit more subtle. More things like, you can go and you can cashless check out at your restaurant, and more places than you ever have. But I think the really big strides have been in a lot of these markets that payments is eating the world, in my opinion. And it's really exciting to see that in a lot of other markets.
Yes. And Odunayo, just curious, has this whole pandemic and financial literacy movement changed your vision into a working vision, or has your 5 to 10 year plan in your business kind of changed, especially starting many years ago?
No, I think it was more of a validation than a change. There was a journey that we were on, and pre-pandemic, we had to do a bit more work to convince people that saving, no matter how small is necessary, taking advantage of investment, no matter how small is necessary. And we used to go around telling big companies that the core of Piggyvest's mission was affordability and accessibility of financial services. And there wasn't a time where that was more true than during the pandemic, where people could no longer go into banks, as they had to do sometimes in the country, to line up. They had to do it from home. And we had a system where people could sign up in 3 minutes and begin their financial journey. So this validated everything that we've been pitching and saying and repeating over the past 5 years. And so it was more, this is how you can take advantage of this structure that Piggyvest has built. And this is how you can leverage it to make sure that should this ever happen again, none of us will be taken by surprise. And this is how you can prepare. And this is how you can start with as little as 30 cents to begin your own financial journey. So that's kind of what it was for us. We reoriented a bit with how often we would drop features because based on the mental health of everyone working on the team, we actually kind of all took a hit. Everyone was confused, tired, wondering what's next. How do we go back? And so we were a bit slowed down in terms of how much output we were like getting out there. But in terms of the vision, that has remained very, very steady. And we were validated and then a bit expanded in that we can actually do more. We can go from savings and investments to affecting other aspects of financial services. So that's kind of where we're going now.
Yes, and I think especially during the pandemic, speaking from a Gen Z perspective, there has been so much validation that it's actually become a trend and trendy to having honest, open conversations about money and becoming a part of this financial literacy movement. And so, Mitchell, I'd like to ask you about specifically topics within financial literacy. Has there been a few topics or maybe just one that have really brought an interest to people, as you think, within the pandemic?
Yeah, I think that a whole lot specifically around retirement has changed because of people recognizing you can invest in different asset classes. So, for example, as cryptocurrency has kind of taken off in the pandemic, more and more people are interested in, okay, what are all these different asset classes and how do they actually help me with my retirement goals? And I think that's been a very, very large change that we didn't see, right? It's like people have learned about there are other things other than savings because of the pandemic and all of these other things that have happened, specifically in fintech. And I think that's been actually something that's been very, very, very remarkable and very, very kind of powerful for the market and also for the larger space. So a lot of financial literacy has come as actual innovation.
Yes, I definitely say from a social media perspective, there's been countless times. I think everybody knows what a 401k is and what a Roth IRA is at this point, and especially the cryptocurrency movement. And so, Odunayo, what have you seen that has provoked a lot of interest in this financial literacy space because of the pandemic?
Right, I think it's more everyone is kind of trying to avoid being put in a difficult position. Nigeria is an emerging market, and typically we were just like kind of coasting along, and then we had the pandemic and people kind of took a big hit personally and financially and even professionally. So right now what we're seeing coming out of it is that people are getting prepared financially. They're learning more than anything. As you can see with the cryptocurrency adoption, Africa is kind of taking charge and taking responsibility for their own money matters. The conversations are more honest and more open than ever, and that's really very encouraging for people who started that journey when people didn't think that money was a thing you needed to talk about openly.
Yes, so we are getting to a close now of this space. We are going to wrap it up with where can we find you guys? We're going to kick it back to you, Odunayo. Where can we find you? Where can the people watching and listening reach out?
Right. Well, I have a fairly active Twitter handle, so you can just find me at Eweniyi. I have conversations about tech and quite a bit of memes on there, and also perhaps on Instagram at Odu_Eweniyi, and I'm also present on LinkedIn.
Yes, if you haven't learned as well, meme culture is definitely on the move too, and it's definitely become a staple after 2020. Yeah. And Mitchell, where can we find you?
Absolutely. Well, first of all, check out Lendtable.com, Lendtable.com. And secondly, you can find me on Twitter at whoismitchjones7. Simple as that.
Thank you so much. And again, my name is Thaler Price, Gen Z financial literacy advocate. You can find me at Priceless Stay, and we are going to pass it over to Matthew.